we are talking about public debts and interest charges. And so this would be the one where we would start to think about, okay, now what does this mean? We're going to run a deficit. What is this going to mean to Canada from the perspective of how much is this going to cost us? And so I thought this was a great breakdown. So if we look at the public debt charges, obviously increasing, and then the interest bite. So we're starting to see, because rates are at a higher point now, we're starting to see that those interest charges start to pick up. And as we continue to run a deficit into the foreseeable future, the cost to carry that load is going to be more and more punitive as interest rates stay elevated. So it's something that I think is important to think about. But when I step back and look at what governments have been doing for years and decades, as you can look at Japan, certainly as a prime example, Japan's been running massive deficits forever. And if interest rates are zero-ish, you can have big deficits and it doesn't bite into the growth in the economy. Obviously, there's many people that will argue the other side of that, in that we should reduce deficits with a focus on austerity. I don't think we're in that particular environment right now, because the governments of the world are spending to grow and stimulate their economies. Therefore, it gives Canada and the Canadian dollar a little bit of ability to continue to take that approach as well, which is have some leverage and debt. Interest rates are relatively low, and try to put ourselves in a position to continue to win for the future. But I think this is an important piece to focus on, where people worry about the size of the deficit and more personally worry about the costs associated with that size of that deficit. So I thought this was a great chart that explained that.